what are your forecasts for asset allocation going forward, like this year and next year?
This year, I would say at some point we would need to so I would say have relatively little amount in stocks, maybe 20% in stocks.
Explain why too.
Okay, it would in a second.
Yeah, sure.
So I would maybe 20% in stocks. I would buy, start buying, loading up on individual bonds, maybe 10 to 20% in cash, and then I would start loading up on gold as well.
Oh, okay.
Yeah, and the reason for that particular mixture, I mean, the key is minimal in stocks and then minimal in cash, but mostly in bonds and gold, is because we've seen interest rates gone up for the last year or so, right? And typically, you don't see the full effects of the interest rates increase until 18 months, usually 18 months to 2 years later. So with us in North America, having interest rates gone up so aggressively in the last 12 months, we haven't seen that full effect impact the economy just yet. We're starting to see a little bit, but not the full effect, right? So spending power, corporations cutting back, like we are only starting to see. So what I'm saying is in the next 6 months or so, we may see things to particularly get worse, and that's why I would want to be more defensive, buy bonds which principal guaranteed, hold until maturity, and gold. When there's chaos, people want gold, right? So that's why I would buy more gold and more bonds at this point, and a little cash.
So if you buy, when there's more chaos, people might buy more gold, and then gold supply lowers and the price goes up.
Exactly.
I see.
Yeah. So when there's war, when there's recessions or COVID, people want gold.
Okay.
When it's like end of the world, Armageddon, gold.
I see. And then do you recommend your clients when they buy gold and then sell it, or just hold on to it for long term?
I would say sell it. When to sell, obviously, again, depending on the outlook.
Yeah, for sure.
Right? Because to your point, if you held gold for the last 10 years, it didn't really do anything. It's 0% return.
Because it basically went through a cycle, right?
Exactly.
So you gotta sell it when it hits the peak or close to the peak or something.
Exactly. So that's why you have to understand the cycle, right, in order to adjust the asset allocation. Because if you just buy and hold something for a long term, you earn nothing over the last 10 years.
For gold.
Yeah. Right.
Whereas something like if you just put it in the index fund, it would have gone up significantly if you held it for 10 years.
Exactly.
Or if you bought a piece of real estate, it would have gone up.
Exactly. Right. So you just understand what's happening in terms of the interest rates, what's happening with the monetary policies, what that impacts, how that impacts gold, how that impacts stocks, bonds, real estate, and then do your asset allocation that way.
So gold is more of a short-term play. When I say short-term, I don't mean a couple months, but not 10,
relatively
20,
short term
years.
In my opinion.
Yeah.
Because gold doesn't generate any income for you. It goes up and down depending on politics.
Yeah.
Like for me, gold is really just to take advantage of what's happening in the world. If there's no chaos,
gold usually goes down in value, I'm guessing.
Again, depending on what's happening, I would say, best case scenario, if nothing happens, flat. It'll hold its value.
I see, yeah.
Right? I can't see it declining in value unless something more precious comes out and everybody wants it.
Yeah.
But as of today, again, gold is still worth something. If I were to melt your gold watch, I can sell it for something.
Yeah.
But so there's still value.
Yeah.
There's perception of value there.